Hello, 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 everyone. Happy Father's Day out there. What are people doing tuning in on Father's Day? How is everyone doing? What am I doing a live stream on Father's Day? Well, the future's still open in a couple hours. So, for the futures traders out there, we still got to prepare even though it should be slower. Stocks are closed tomorrow. It should be slower, but we still have to prepare. It's always part of being a trader or a very active investor. Good afternoon, Davey. Hello, Waka Waka. Time flies by so fast. It seems like we just had a live stream a couple days ago. And yet we did. Happy Father's Day, Josh. I don't have any kids. And I'm not going to use the old line. I don't have any kids I know of. I don't have any kids. And I'm just a dad to dogs. So does that count? Can I be like a furry Father's Day? Hot weather, I had some gin and tonics earlier in the week when it was super hot in Chicago. Well, yesterday it was cold in Chicago by the lake. I'm right by the lake. So it was very chilly. It was jacket weather. But today's warming up a bit. It's getting nicer today. Waka Waka kids, thanks. I had a good day with the kids spending my money. Well, I hope they spent it well. Yeah, Bitcoin breaking down into 17, what was it, around 17.7 before popping back up. See how long that can stay up. I mean, it is brutally oversold. I would not be surprised. Talked to a couple of people that were wondering what to do with their crypto positions. So I gave them some information yesterday, watching for a little pop, and then it's like, I'd recommend unwinding some stuff. Good evening, Anissa. Still more to fall, I agree. So this next little pop, I think, is going to be, if you want to get out, you got to get out. It's not just buy diamond, what is it? Diamond hands and hodl. Good evening, Mikey. Oh, hey, AP's World. You're going with the Mikey. I think it's got a bit more to drop. We can glance in on that because Bitcoin, I was watching it yesterday, trades 7 days a week. Top of your shirt blends in with my green screen. I know. I know. It's a problem with wearing tie dyes. And I don't feel like changing shirts. So you're going to have to deal with disappearing Mike. See? Like I got arms here, but this is my Joe Bonamassa Blues of Rock tie dye. Cryptos are booming. Cryptos have bounced back a little. It depends on your time frame. By the way, I just to let everybody know, let's switch screens here. Let's switch. There we go. The future's still open at 5 p.m. Central tonight. Pretty much, unless you're trading like lumber and livestock and everything else. Uh, so that's and some stuff. We have the extended pre-open at 4 Central Time. Tomorrow closing at noon Central. And it's all geared off of Central Time because the CME is in Chicago. So, 12 Central for the equity futures. Cryptos aren't till 4. Interest rates are at 12. Foreign exchange is at 4. And energy metals are at 1:30 p.m. And then the regular back open tomorrow at 5 p.m. Central. All right, so that's where we sit. Why? Because we have Juneteenth tomorrow. Well, Juneteenth is technically today, but the market holiday is tomorrow. So, and that's why we still have to see not much going on tomorrow with the stocks, and of course, no economic reports. But let's take a look for the rest of the week. On Tuesday, we have existing home sales, which we'll have to see how big a drop that is. Barkin speaking. By the way, there's a lot of Fed speak this weekend. Yellen was speaking. It's been an interesting day of Fed speak. So, and Yellen, who's not who ex-Fed, but she's the whatever she is anymore. She's in charge of the currency and the whatever. Chicago Fed National Activity Index very minor. Wednesday though we have mortgage applications and we got Powell's testimony. Remember, he's got testimony. For 2 days. So he's got testimony on Wednesday and Thursday this week. You got Fed Evans, Harker speaking. So that's going to be the main thing that could potentially move the markets if they say something that shocks the markets. But they're back to full. They were on again today speaking on Father's Day. We can't even get a break on Father's Day. So 2 days of Powell's testimony. You got the composite PMIs, manufacturing PMIs, and service PMIs coming out also on Thursday. And then you got some Kansas City manufacturing index. And then we have big one on Friday, consumer sentiment, which could be absolutely brutal, and new home sales. So that's what we're looking at. Not as many things volatile. Remember, we had that massive OpEx expiration on Friday, quad witching. But the mega caps bounced a little. By the way, I've not had a chance to do the sector overview yet. I might just wait till tomorrow to do it. I actually watched some of the Canada Grand Prix. I love F1 racing, so I was watching that for a bit, taking a short break, but still doing some reviews of the markets while that was on my screen beside me. Energy got hit big. Let's see. There's no point really going over here. We're still at that 75 basis points, and we'll have new gamma numbers coming out, by Tuesday. So there's no point glancing at that just yet. Price target on BTC is 9 to 12K. I completely agree. It's right here. Where's my next major targets? We're getting this little bounce. Would not be surprised to see a nice little move back to the daily rotation zone. But where are my next targets? In case you were wondering, minor is still 14.4. Then major area is about 10.7 to about 12. 10.7 to 12 is my next major area. And then if we collapse below there, then it gets real interesting. Then the next, I don't have a target back down. You got some minor targets there, but you start getting below that, your next major target isn't back down to about 4,000 to 5,000. So that's where we sit. Even on a bigger rally, all this prior support is becoming resistance. So it's really sell the rallies on this thing. Really, even if you got a 50% retrace back up to 25K, it would be a gift to sell. We don't have to dwell on that. Ethereum, that's got a nice little snapback. That was below 1,000. That got down to what? 879. And my return even of my minor targets on that are about 1,200. Then if we get through that, I'm watching about 1,400 for the targets on that. S&P, what I'm watching for tonight when it opens and into the European session is to see how close, unless there's something major going on, to the upside, we still have this little double down here. And I need a 4-hour close. It is lower probabilities because it is against a 4-hour rotation zone. And if it did trigger, it doesn't even take it to the daily rotation zone. So I just want to clarify something. It's slightly lower probabilities because we've done analysis when it's against, like in here now, if this goes sideways and doesn't trigger and the rotation zone comes down and then it triggers, the probabilities go up. And why am I not saying it's lower probability based off the daily? Because when you have a double this far away from the daily rotation zone, it can complete the double at least the first two targets without reconnecting with the daily rotation zone. So the probabilities aren't lowered. Sometimes when you see the daily rotation zone like right down in front, I'll say lower probabilities because those are the ones that significantly lower the probabilities. So that's about it. What would that trigger be? It would be on above 37.1350, and I'd at least need a 4-hour close above that to get interested in it with the holiday conditions. If it rotates back down pretty much below about 36.57, it's off the table. It would then turn into it'd be a very sloppy I can't say it's completely off the table, but on the 1 hour, it would be a triple bottom. Then on the 4 hour, it would just be horribly sloppy. So, what's interesting, and here's the thing you're going to hear about in the sector overview also, because I was already looking at my sectors I've already started my analysis on it. And you have a lot of things with cycle bottoms on the daily. So these daily cycles are trying to turn up, but the weeklies are still turning down, okay? The weeklies are turning down. What does that mean? It means we can get some rallies. We may even get some short squeezes. They juice it up with some mega caps because those are the things I'm really going to be glancing at first. But Can we get a super sustainable major rally off this yet? I'm not so sure, not with the cycles mismatched on this. So that's key. Now, with this little double, would that be a major rally? No, that would just be a short little pop rally back to and reconnecting with the daily rotation zone. So that's what I am focused on. By the way, you get a close back below about 36.67 on a 4-hour basis, and I'm going to start watching for a potential bigger dip back until the U.S. stocks reopen. Nasdaq with this was only valid. I went over this on Friday afternoon. Why you can't trade this on the 4-hour because of the stair step higher. You could still trade on the 1-hour. It confirmed but not triggered. And this is the one closest to triggering. So this is the one I'm paying attention to the most, but it is also the riskiest. And that's 11,348.50. Then 11,463, 11,520, 11,587. The key area on here for if close below is about 11,188. Close below that, then I watch for some of those retests of the low areas. And this is bumped up right against the 4-hour rotation zone. So it's a very interesting position. So it is slightly lower probability. But if it did manage to trigger and get up here, the daily's not yet there, so it would just be for a run to a reconnect with the daily rotation zone. Again, cycles on the dailies turning up, but the weekly's rolling over. So now even if it made a run up to these double targets, it would not change anything with the weekly cycles. It would just be poised for another potential rollover. Where are we sitting? Rich says Bitcoin will go to 3K. It could. Don't forget J-Pal's talk to Congress, fireworks. Yeah, that's why we still get that. Based off what they said today, I think 100 basis points is off the table. They do 75 again in July, and if things were still running way too hot, they'd start jawboning for 75 in September. Based off the comments today, I really think a full 100 basis point hike is off the table. They do not want to shock the markets already than they have, and they just go with a more than one more 75 is my thought. Thanks, Mike. Great to have you for a few today, especially with the Prez falling off his bikes. Yes, I did see that. And he's okay, so that's a good thing. Rich thinks it's a relief rally, and we could very well. Well, it's going to get interesting because we got Powell's testimony, and things can still turn on a dime. And based off what they were saying today also, and I forgot everyone who was speaking, but there was like 3 or something plus Yellen. They're not going to ease up on inflation. They are not, but they're still in la-la land thinking that there's not going to be a recession and it's going to be a soft landing. But they even stressed, we could see a return to 4% to 4.5% unemployment, and it's not going to phase them. I think they're more serious than they've ever been, which isn't necessarily saying that much. But I'm going to give them one minor ounce of credibility that at least they're paying attention that the inflation is stuck and way too high, and they're at least attempting to make their limited attempt to bring it down. They are no Volcker. Hello, Christoph. Hearing only hawkish stuff from the Fed and then Bitcoin sell-off. So yeah, and that's what the Fed. So pay attention because they're not going to ease up on this. Do you share what settings you use for the stochastics? Those aren't stochastic. That's a stochastic RSI. You can have the settings. It's right here. It's actually a stochastic RSI. You can do it here. I'll show you what it is. This is actually a modified dual lookback stochastic. But it's essentially, I'll show you when I recreate it the other way. it's this. I didn't want two of them because it tests out better for doing cycles on it. And it's, what is it? Oops. That's pretty close. I'll have to double check that, but that's pretty close. So you want to use your, if I scrunch this up, you'll see. I might be slightly off. Let me double check something here. 8, 13. Oh, no, that's the wrong one. 8, yeah. I'll double check that for you. Or it's this. I forgot which one it is. Stochastic, is it that or is it RSI? One of these is a 5. I'll double check. I'll get back to you. Yeah, that's what it is. There you go. Use this so you can call up whatever your platform is. You're going to call up a stochastic RSI, and here's your settings. Stochastic length is 5, RSI length is 8, D is 3, K is 3. There you go, Christoph. So anybody, you can put this on your charts. So you don't need this indicator at all. You just use whatever your platform is. Again, stochastic RSI, one more time. 8 RSI, 5 stochastic, K and Ds are both 3s. And it works real well for doing your cycles and finding, when one's at the bottom. You can see how top. So I'm just going to take this off for now. There we go. Top and rolling over, especially when the stochastic crosses below the RSI line. That is a trigger. That's the official rollover trigger, and when it crosses up, that's the official turn up trigger. So you see dailies turned up and moving up, but weeklies moving down. So when the cycles match up, you get much more powerful moves. When they're reversed, the daily still technically supersedes. I mean, the weekly supersedes the daily, but you can get smaller daily rallies. Now, anything can still happen because it is the markets and the cycles can break. But those are what you would like to, if you want to play along at home. That's what it is. And we also have the divergence on the dailies with, you see, lower low, higher low with the RSI. So we're getting exhaustion divergence. Now, against this major trend, the stronger one is when you get a triple divergence against this strong a trend. So we could get the rally, then another rollover play, cycles to bottom, and then the stronger rally. But that's why I'm watching this. This is the only setup I have, besides being aggressive with just a double divergence, are those double plays. Here's your Dow. The Dow still with a valid double. Above 30,212, 30,454, 30,580, and then back to 12.5% harmonic, right there, 30,693. You see here out of the way of the daily, so it could complete and then have another rollover move there. And you also see Dow cycles rolling over on the weekly, on the daily trying to turn up. So on any rallies, what I'm watching for a shorter term pop is the reconnection with these daily rotation zones or a potentially choppy stair-step rally up before another potential rollover. Is that next potential rollover a flush out move? Don't know yet. Russell, this is another very sloppy one, but again, using the conservative targets in the Russell, it would be above 1688, 1707, 1716, 1726. That would be for the reconnection again with the daily rotations. So much stuff's just trading in complete lockstep. So even you have these divergence on your DAX with the daily cycles turning up, the weekly cycles rolling over, and there is, come on, this is no strong bottoming pattern yet. The play in the DAX for me is if these doubles start triggering and we're above about 13,215, then I'd watch for a run back to the 25% harmonic area with the declining 4-hour rotation zone. That would be the bullish play on the only bullish play on the DAX I have. If it sells off, the next cluster area is 12,854 still. Crude, which just got slaughtered back to the 50% harmonic level. Major support is coming in with this trend line, and on a closing basis, about 104.46. A close below that, then that warrants a potential return to the $100 area. And this broke these little two higher lows, but the major higher lows in this trend line is what I'm going to be focusing on. I don't have a great bottoming setup yet, so the only thing, I don't really have a play yet. I have to wait for some more. If it's going to go back up, I have to wait for some more price action to unfold going into the next day or so. If we start pulling back, this is the area I'm watching, though, for support. I just don't have a new long play set up yet. Natural gas, again, we had that double coming down. First, second target hits, a little return to the daily rotation zone, rotating down almost to the final target. The only thing that could change, now this is a potential double bottom. And even if it's this first target, that potential double is going to stay in play. So above $8.03, you're at 853, 879, and 946. If it drops below 836, my next key area is about 657 to 637. And if it came down there, that would invalidate that potential double bottom. So that's where that sits. Gold, and still caught in the range, finished that double, and now nothing. I'm again sitting with need some more price action based off of Friday's things. We do have a potential pullback flag pattern, is about the only thing I'm watching. So if it can get a rotation back up, and if it gets a close above this high, it is a rotation back up out of the flag and a %B buy signal. So that's the only aggressive trade I have to the upside. If it breaks down, we get below this key level right here, about 1846 on a closing basis. I'm watching for a retest of the low areas. So that would take any potential bullish play off the table for the time being. Notes, we've still triggered the double, and I'm still watching for the return to 116.25, 117.06, 117.19. Pulled back to retest the trigger area, and so far holding with a sideways move. Then that's your 4-hour. Now, again, this is where I talk about, remember, that lower probability. Why? Because it's just against this daily rotation zone and stalling out there. So this is the one that I say it is lower probability because of where the rotation zone is. The rotation zone is not, it's not closed into it yet. If we get a move out back up and we start closing into it tomorrow, then, you know, it can easily make a run to the other side, but the probabilities are lower with it being this close to where that trigger point was. What invalidates this at this point? Since normally I'd wait till the first target hits, but bonds have been so volatile and bearish, if we pretty much get below 115.04 on a closing basis, at least on the 4-hour time frame, it's done. It's off. It's using a little tighter stop on this one. Dollar index, inside bar on Friday, lots of volatility. Key area for me the double is still in place. This move has not invalidated it yet. If we make a push and get back to this top area, it will be invalidated. If we close below 102.87, I'm going to be watching for then the front run pattern to get to the retest this low area and then possibly trigger. But based off what I was looking at with some euro and other stuff, we could see another push higher in the dollar index. Remember to keep an eye on your Japanese government bonds, the 10-year. Let's see what happens if we get the intervention and the snapback down. But that is very key because you're going to see this. We do have a potential double top, so we're keeping an eye on this very closely with the Japanese 10-year bonds and the yen. Okay, let's check the VIX. My breakdown area is about 30.25. My breakout area is about 33.40. So break above there, then we start getting back into some more fear mode, and I start targeting sell-offs more. We break below about 30.25, start looking for a more sustainable rally. And I know the stocks are closed, but longer term, or at least this week, I'm still focused on mega caps and junk. And potentially just give you a little preview what other sectors, like the stuff I'm avoiding. Utilities at this point just got absolutely crushed, but there could be a little bounce. And when I say junk, communications have been completely destroyed, but there could be a little bounce in those. The retail is sort of interesting because this is held up remarkably well, and retail a play above about 61 could be for a short-term pop. So I will start looking closer at retail stuff if the XRT can start getting above 61 and we get some a little market momentum to the upside. But that's a little preview of the stuff I'm starting to look at. TomTom stocks, no all-time high by year end, not statistically. We'd have a lot of chewing to get through. Could we form a more significant bottom in October? Yeah, but then could it recover all the drawdown? Because I'm still expecting much lower pricing in the S&P and the NASDAQ. So then could it recover all the way to all-time high? Not unless some things drastically change. Even if they'd have to go to quantitative easing, massive rate cuts, make money cheap again, and then I don't even think it could blast off enough to get to all-time high. Isn't inflation topping? Yeah, but let's say it's topping at 8% or 6-something% in core. It's got a long way to go to get back to 2% year over year. Remember, you can have inflation top, but let's say you start saying let's say you see core prints like say 6 and then 5.5 and then 5. That didn't lower it year over year. I mean, they're targeting getting it back to 2%, and they're not expecting that for at least another year. So we're not going to rate cuts anytime soon. Not unless something drastically and weak. I mean, I think we're technically verging on a recession now, and numbers that are going to come out are going to come out way worse. But we still can get earnings multiple compressions over the second and third quarter. They're not going to stop hiking anytime soon. And again, they started talking today. You know what? They're ready to withstand return to 4 to 4.5% unemployment rate possibly. They're not going to blink. So you have major headwinds in the market. For the time being, cheap money is done for. And stuff is still, I see people talking about, oh, look, the PE ratios have come way down. Yeah, but you have yet to have the other double. There's sort of the other shoe is not dropped. The first shoe dropped, which we've had some price correction, some pretty significant price correction. The second shoe, which is the earnings compression, comes in, and that actually elevates the PE again. So then you need an earnings recovery then, or you need a further price compression. So that's the second shoe to still drop. Plus, there are just no long-term buy signals yet. It's some form of inflation is here for 2 years at least. I mean, they're not getting this back. They don't see 2% coming back until 2023, really. Yep, we covered that. Jay Powell speaks in front of Congress on Wednesday and Thursday. And they are just, I mean, QT is just starting now. It's just going to get very interesting. Very, very interesting. Did you see Kathy's tweets? Did anybody see Kathy's tweets? Her insane tweets? Let's see if I can. Let me scroll back. Let me switch cameras. Well, yeah, the next CPI could, or the one after that could easily go below 8, but it's not going back. Even if it went to 5, they still have massive work to do. So that's what's so interesting. You know, there is a lot of work still to do with stuff in the markets. There's still a lot of stuff to get through. Sure, darn it, I can't find her tweet. Does somebody have that? I know some people have to follow. Why can't I find something when I need it? I should have just snapshotted it. Let me see here. Here. Kathy Wood. This was hysterical. Volcker doubled the Fed funds rate from 10 to 20% in less a year. Powell's Fed has increased the Fed funds rate sevenfold in the last year and is pointing to another double from here. Moves are already more draconian than Volcker's, and she manages money. Okay, 10 to 20%, yes, is a 100% increase, or it's a double, but you're only moving from 0.25. Oh my goodness. It's a 7%, sevenfold increase from interest rates going from 0.25%. Yes, is a sevenfold increase. And Volcker didn't go from 10 to 70%. That is true. However, it's not more draconian than what Volcker did. It's insane. It's insane. That's what until we get this flushed out of the market, we're not at a bottom. What did you say, Christoph? German Minister of Economy, Green Party approving more coal energy generation. Panic is mounting over gas supply and it's early summer only. I know they're already panicking from what I've seen over what's going to happen with natural gas supplies for the winter. So it's going to get very interesting. Very interesting. We need some catastrophic news. All right. She's a lunatic. She caused me to lose so much money by buying coin and hood. Kathy is... She was built for crappy growth stocks in a very loose market environment. With a lot of gamma juicing from option plays from the retail crowd. She's not built for these markets at all. So, all right, everyone. That's where we stand. I will get out at some point the sector overview. I'll probably, depending on how things are looking tomorrow, bounce back on just for an afternoon session. An afternoon session. So to see what other setups we have going in for tomorrow evening, and we'll get for some more clarity to get a jump start on Tuesday. With that, I'll do Tesla tomorrow in the afternoon session. You are welcome. Yeah, natural gas short. I meant winter will be interesting. Lots of upside potential for natural gas. Yeah, but I mean, they're going to trade very differently in the U.S. versus Europe. So that's going to we're going to probably see a pretty wide divergence in the way those contracts trade, at least for a while. All right. Again, thanks for putting up with the part of my body missing with the green screens. I didn't feel like changing. Again, everybody have a happy Father's Day. If it's already late over in Europe, have a very peaceful evening. And everybody else who's in the U.S., have a fantastic rest of your day. And I will talk to everyone tomorrow. Again, thank you for tuning in. Bye for now.